the Department of Education, during President Donald Trump's administration, has begun notifying millions of Americans with overdue federal student loans that their wages will be garnished in the coming months. This announcement coincides with the administration's decision to send millions of borrowers in default to collections. The garnishments will occur in phases, with the first group of borrowers experiencing wage deductions in early June. On Monday, the Education Department started issuing 30-day notices to approximately 195,000 borrowers in default, informing them that they will be subject to the Treasury Offset Program. This program allows the Treasury to withhold various types of payments, including tax refunds, wages, Social Security payments, and disability benefits, to settle delinquent debts owed to state and federal agencies. Later this summer, all 5.3 million borrowers in default will receive notices from the Treasury indicating that their earnings will be subject to administrative wage garnishment. The department has not collected on defaulted loans since the onset of the COVID-19 pandemic. With plans to resume these actions, many individuals could face worsening financial situations during a time of significant economic uncertainty. According to a report released Monday by Credit Bureau TransUnion, over 1 in 5 borrowers are at risk of defaulting on their loans, a higher proportion than before the pandemic. Approximately 20.5% of borrowers have payments that are 90 days or more overdue, compared to just 11.5% in February 2020, as stated in the report. The current delinquency rate is the highest ever recorded and may be more widespread than it appears. When defaulted debt is sent to collections, borrowers often have less money to cover their expenses, leading to further debt accumulation and significant declines in credit scores. Social Security beneficiaries are particularly vulnerable to adverse financial and health outcomes when their benefits are garnished, according to the Consumer Financial Protection Bureau. Senator Kirsten Gillibrand from New York recently sent a letter to Education Secretary Linda McMahon, highlighting the fragile economic environment and requesting details on outreach programs and other measures the department is taking to mitigate negative financial impacts on everyday Americans. She expressed concern that withholding income from borrowers could unnecessarily exacerbate economic strains in local economies, while New Yorkers worry about a precarious economy and potential recession. To exit default, borrowers need to repay their loan in full, which the department acknowledges is not a practical option for most. They can also rehabilitate or consolidate their loans. The loan rehabilitation process depends on the type of loan and servicer, and typically takes several months to complete. Wage garnishment may continue until the loan is no longer in default, or the borrower has made at least 5 rehabilitation payments. Consolidation is quicker, but could result in higher interest payments. Additionally, borrowers cannot consolidate their loans unless the wage garnishment order has been lifted. Ellen Keast, a spokeswoman for the Department of Education, advises borrowers in delinquency and default to begin repaying their loans to avoid the consequences of default. A borrower with loans in default can stop Treasury offset and wage garnishment by entering a rehabilitation agreement and making the first 5 of the 9 required payments. The Education Department encourages borrowers to make a payment, enroll in an income-driven repayment plan, or sign up for loan rehabilitation before they default. Despite efforts by the Trump administration to reduce staff and dismantle parts of the Education Department, the agency claims it has increased customer service capacity to assist borrowers.